when we think of the performance of markets, we think of three key factors: macro, sentiment, valuation. And at the beginning of the month of September, we had a perfect alignment of planets in our view. First, with the recession fears that we had, sentiment was overly bearish. But the macro situation, according to our indicators, was still decent enough to remain overweight growth assets. The final element is the valuation situation. At the beginning of September, everything growth assets related was actually attractive. As you can see on the graph, which shows our in-house valuation metric for risk premia generally, which is based on carry, it goes from -2, very expensive, to +2, very cheap. As you can clearly see on the chart, valuation at the beginning of September was still attractive. So we had a perfect alignment of things: macro, sentiment, valuation. Since then, we've had a rally that corrected everything, with sentiment improving as recession fears went away. So we're still seeing things through macro, sentiment, valuation. We do not expect that the macro situation should change in the forthcoming quarter. We are still seeing the current situation as a mid-cycle pause. That's what the Fed says, and that's what our growth nowcaster says, as you can see on the chart. The chart shows three lines: the evolution from 1994 to 1996 of our US growth nowcaster, the current evolution of our indicator, and finally, in red, the typical pattern that we observe during periods of recession. We think that this 1994-1996 period is very similar to the current period, but the current period is very dissimilar to recession periods. So for now, we still think that the macro situation remains on check. Having said that, valuation and sentiment, which were two very positive factors to our scenario, are currently a lot less positive. We're not negative overall, but we think that everything is currently expensive, which was not the case at the beginning of September, and sentiment that was overly bearish in September currently is bullish. So when we think again of the three key factors, macro, sentiment, and valuation, we are currently still overweight growth assets, mainly equities and credits. The reason for that is that the macro situation remains decent enough, but valuations are a lot more expensive and market sentiment is a lot more bullish. So what we expect for the quarter to come is that sentiment could be in the driver's seat. By that, we mean that market sentiment could be a lot more sensitive to news flow. The chart that you can see is a very fair illustration of that, showing the evolution of the VIX throughout last year and highlighting the two very important periods during which we've had tweets on trade war triggering bursts of volatility. We expect something very similar for the quarter to come, if not the year to come, meaning a lot more volatility in markets. Having said that, we also think that we should see a lot more discrimination within asset classes from which we could profit from a dynamic asset allocation perspective.